the Federal Reserve, the Board of Governors, the head of these Federal Reserve banks, the presidents of these different Federal Reserve banks, along with Jerome Powell, seem absolutely desperate to get the inflation rate higher, to get the dollar down. Part of the dollar tug-of-war thesis I talked about on the short video I released a couple days ago. So this is another story that came out yesterday on January 3rd from Reuters. The San Francisco Federal Reserve President Mary Daly said on Friday that the Federal Reserve is fighting too low of inflation. You really have to have bad formulas and economic propaganda, corrupt economic data, corrupt formulas to not see the inflation, to not see the higher asset prices, to not see that many Americans are suffering from stagflation and taxes. It is absolutely horrible. Meanwhile, you have people like Joe Wiesenthal, who works for Bloomberg, talking and showing academic research and other links on his Twitter about how there is no inflation and how deflation is really bad right now. Unbelievable. That's how divorced from reality the people in power are. The intelligentsia and the other people that pull the really bad economic levers. So the Fed is looking at something called the Core Personal Consumption Expenditures Price Index, or PCE. The index is based on a dynamic consumption basket, and the Fed's preferred inflation gauge showed prices rising by just 1.3% in October compared with a year earlier, which has the Federal Reserve worried, as if 1% inflation wasn't bad enough. 2% inflation per year will in 36 years, because there's something in finance called the Rule of 72. And so if there's a 2% inflation, you take the number 72 and you divide that by 2, and that means in 36 years, the prices will double. But if the Fed is changing the inflation target, and Jerome Powell in the last month, he's given press conferences, congressional testimony, where he's talked about interest rates will not rise unless there's a lot worse inflation, and he doesn't see that happening. And interest rates are going to stay lower for longer because of financial repression, because all these governments are all copying Japan. The U.S. has such enormous debt levels, and the funding of the government budget deficits is precarious, to say the least, along with the repo problems, and how, according to Daniel Amerman and others, in the last 12 weeks, the Federal Reserve is essentially already doing MMT light, that the federal government cannot afford higher interest rates to borrow. So the inflation targeting is going to probably get worse. There's been whispers from people, different Federal Reserve heads, different Federal Reserve Board of Governors, different heads of Federal Reserve banks. Jerome Powell, I believe, has even referenced this in December speeches, talking about how maybe they need to have a 4% inflation target. Well, if the Fed has a 4% inflation target, I want to put things in perspective with the Rule of 72 there, which allows you to calculate things doubling. That means that in 18 years, if there's a 4% inflation rate, prices will double. Because 18 times 4 is 72. Crazy, huh? So the Fed, it's unbelievable. But the Fed wants a weaker dollar, and Jeff Gundlach has talked about this as well, that he believes that the Fed is nominal GDP targeting. Jeff Gundlach talked about this in the last week or two in his long CNBC interview, where the Fed is nominal GDP targeting. They want a higher inflation rate, and they're trying to have the GDP and the inflation rate above the interest rates, I believe. Yasser asks why interest is not going high. That's because central banks are in control. The 5 or 6 largest central banks don't want interest rates going up. We've reached the later stages, the later innings of this game. So I have a bunch of different articles here if you want to read more of Jeff Gundlach's comments, if you want to dig into Jerome Powell's speeches in the last month. But the bottom line, and you just saw this on your screen there with the new article from Reuters that came out yesterday. The Federal Reserve, Fed may need new approach to boost inflation, Daly says. The Federal Reserve could find itself fighting too low inflation for years to come, San Francisco Federal Reserve President Mary Daly said on Friday, and may need a new policy framework to lift inflation back up to the Fed's 2% goal. You know, this is so divorced from reality. They're not counting the asset price inflation with stock prices at or near all-time highs. They're not counting bond prices high, real estate prices high in many areas. They're obviously not looking or not publicly commenting about the Chapwood Inflation Index. The most accurate measure of inflation I've seen, and I've been talking about this pretty much longer than anyone in the gold community and alternative media, is Ed Batowski's Chapwood Inflation Index. I've been talking about this for 5 years now, before Chris Martenson even interviewed him years ago. And the Chapwood Inflation Index, the lowest 5-year average inflation in the top 10 here is Phoenix, which has an 8% annual average inflation rate, and the other major cities in the US have even higher than that. But if you look into the data, the amount of rent price increases in Phoenix has exploded. In the last 12 months, I think Phoenix leads the United States in rent price increases, to rent. So that 8% number, I'm not sure how much longer it's going to stay 8%. Let's just put it that way, because it seems rent is going up a lot. Probably a lot of Californians, either a lot of retirees leaving the Northeast or Canada and heading down to Arizona, or a lot of people leaving California and going to the Phoenix area instead to reduce their cost of living. As I covered on the most recent show, with how many Americans, they don't exactly understand what's happening, but they understand that their standard of living is in jeopardy, and they are moving out of the higher tax, higher rules, higher regulation states. So they're trying to cut their expenses by moving to lower cost of living states with lower taxes. Although who knows how much longer those lower cost of living and lower tax states will stay that way. And I cited Virginia. Virginia's changing very, very drastically, because Virginia is number 1 or number 2 in business, the rankings with CNBC and others for top states in the U.S., along with Texas. Virginia and Texas normally alternate for many years now, 1 and 2 for top states, states in the U.S. for business. But I'm not sure how much longer Virginia is going to stay at the top. Let's just put it that way. So the Fed is intentionally looking at any piece of data that will tell them they've already come up with their conclusion that there's not enough inflation. So they will look at any piece of data that tells them that their inflation is low, and they will ignore every other piece of data like food prices or the real cost of healthcare, and so many rent prices going up, and so many other pieces of data that say that inflation is going out of control, along with asset prices. As bad as stagflation is in the real economy here in the U.S., the asset price inflation is been so much worse the last 10 years. Okay, let me continue with the article. Quote, "We don't have a really good understanding of why it's been so difficult to get inflation back up." Oh my God. Daly said at the annual American Economics Association meeting in San Diego. Meanwhile, this woman is probably getting mid to high 6 figures and multiple pensions, and saying this nonsense, repeating this economic propaganda that an economist in the Soviet Union would have been proud of. But with global growth slowing and the populations of most advanced economies aging, Daly said, quote, "This new fighting inflation from below is going to be with us, I would argue, for a longer period of time than just a few years. As a result," she said, "a new policy framework will likely be required to boost inflation," because there's not enough inflation. And the Fed has hinted it might go from a 2% inflation target. And by the way, some of the Fed's own data is saying that inflation is already above 2%. But the Fed is ignoring that data and pointing to the data that says that inflation is not 2% yet. And the Fed may change the inflation target to 4%. God help us all. Daly and her fellow policymakers are in the midst of a year-plus review of possible new approaches, including one in which the Fed would encourage too high inflation to make up for periods of low inflation. Early indications are that any changes will likely be modest. The Fed expects to release the results of its review in mid-2020. The Fed lowered interest rates 3 times last year to a target range between 1.5% and 1.75%, in part to keep inflation from sinking amid rising global economic headwinds. Also because the U.S. Treasury had to uninvert the yield curve because there were problems with the yield curve. Remember, an inverted yield curve, very, very bad. So the Fed panicked and uninverted the yield curve with the rate cuts. And then also because the U.S. Treasury needed to raise over $800 billion in barely 6 months, the last half of 2019. So they needed to raise so much, so lowering the interest rates makes it easier for the U.S. government to fund its massive budget deficits. Excuse me. part to keep inflation from sinking amid rising global headwinds. Okay, now that at least some of these factors, including U.S.-China trade tensions, eased a bit, policymakers say they will keep rates where they are, barring a material change in economic outlook. Sluggish inflation gives the Fed room to keep interest rates low and probe how far down it can push unemployment. Now near a 50-year low and well below what economists have long estimated should represent a fully employed American workforce, Daly said. Quote, it's a great benefit that you can let the economy run a little bit more and you can actually see what full employment looks like. Daly said, yeah, more Americans are working because they need multiple jobs or a full-time job and a part-time job just to make ends meet, especially with the rise in healthcare costs and food and the others, and rent. But at the same time, which the Fed probably is not counting, but at the same time, low inflation poses a challenge, she said. Quote, we are seeing some early evidence that long-run inflation expectations are slipping. So she's saying that people are expecting lower inflation. That's just great. I wonder who those people are. Are they making like 8 figures and just writing their butler checks? Like apparently Joe Wiesenthal is from Bloomberg, because he's saying there is no inflation. I guess Bloomberg pays him well, so he can make his angel investment and venture capital investments and then share on Twitter with his 100,000 Twitter followers all these links about how there is no inflation. Oh, the cap on my drink almost busted. That would have been a bad accident there. Disaster averted. Double the consumption tax and minimum wage? No, that would collapse the U.S. economy. If you increase the minimum wage and increase like a VAT tax, the U.S. economy, most of the U.S. economy is based off consumer, about 70%. That would collapse the economy. No, a weaker dollar would boost inflation. War will help boost inflation. It depends if they put in wage and price controls, because normally in war they put in wage and price controls, Aaron. Shell asks, would the threat of war in the Middle East boost inflation and weaken the dollar? It would depend on the oil price. Depend on the oil price, depend on the dollar. I outlined, I haven't seen anyone else frame it the way I have, with the perspective I have with the dollar tug-of-war thesis. I explained it as easy to understand as possible. You don't have to be a financial professional to understand the dollar tug-of-war thesis that I outlined. So the Fed, as I said in the dollar tug-of-war thesis video, if you have not listened to it, I recommend going and listening to it. President Trump, the Trump administration, the U.S. Treasury, and the Fed want a weaker dollar, but they can't get, as if the dollar has not already been massively devalued and there hasn't already been a lot of inflation for everyday Americans, reducing their standard of living because most Americans have not been able to grow their incomes, even ones working multiple jobs. That the Fed says, these groups of people, President Trump, Trump administration, Treasury, and the Fed, say that they're not getting enough inflation and the dollar is not being devalued fast enough. IBGI. This is a great post. The only time the Fed wants low inflation is when it's time to calculate cost of living adjustments. Yep, that's the truth. So I feel like the Fed at this point, they're economic propagandists. Joe Wiesenthal is an economic propagandist. If you want to troll him on Twitter, call him an economic propagandist. Ask him if his bills are going up living in Brooklyn or New York City when he's making a 6-figure salary from Bloomberg and some of the other gigs he gets, and then copying me saying Repo Madness on his stupid radio show. These guys have absolutely horrible track records, and they're in place getting paid 6 figures to be basically like Paul Krugman. They have the worst long-term track records for predictions, and they keep their jobs. RR asks, do you think they realize there is inflation but want to try and keep an illusion that there is none so they can keep interest rates low and keep doing repo madness? I think some of the people realize there is inflation and others are true believers. They're brainwashed. They drink all the Kool-Aid. I think Joe Wiesenthal doesn't think there's any inflation So when Joe lives in his fancy Brooklyn townhouse or condo or apartment or whatever, brownstone or whatever he has in Brooklyn or whatever part of New York City borough he lives in, and his local politicians keep jacking up the taxes, and his rent or his mortgage payments are going up, and his healthcare costs are going up, he doesn't count that as inflation. He just blames capitalism, even though he's also a capitalist and making lots of venture capital, apparently in angel investments, because he's bragging about it on his Twitter. So he's the capitalist that makes a lot of money and hates capitalism. Sounds familiar, right? Oh, thank you for the super chat, Penguin. Jim Grant said in a recent Real Vision TV interview that a rise in inflation could be simply the loss of confidence in currencies and central banking. Do you think that's possible? Yes, I think that's already happening, but it's not happening with the dollar yet. It's happening with other emerging market currencies first and other currencies. So this is part of the dollar tug-of-war thesis. If you're living in an emerging market country, you're buying U.S. stocks, you're buying U.S. real estate, you're buying maybe U.S. treasuries, because on a relative basis, U.S. treasuries still have positive yields compared to Japan, Switzerland, the European Union. So flight capital has come here. So people have not lost confidence in the dollar yet, despite what most people in the gold community and the alternative media are saying. What people are actually doing versus what they're actually saying. So when these countries issue a press release that we're abandoning the dollar, most of these people are still buying U.S. assets. Most of the dollar is still king in cross-border trade settlement by a lot. There's tons of dollar-denominated debt outstanding. There's tons of dollar liabilities. So when these countries say that we're abandoning the dollar, their behavior does not match their actions. Their behavior does not match their press releases that they're issuing. It's been this way for a long time. The gold community doesn't. Most of the people in the gold community don't want to admit this. It does not fit their narrative. When the cross-border trade settlements for the amount of US dollars, when that drops a lot, that's when things are going to be bad for the dollar. Good question by Dimitri here in the super chat. When do I think food price hyperinflation will come about? How will the Fed act? I think all the phony economic data, the economic propaganda, the formulas that are in place now, so the Fed can just ignore it. I mean, in a lot of aspects, my standard of living, if my income wasn't rising right now with my channel growth and I wasn't paying my bills, making money from content, I mean, my standard of living would be in vast jeopardy. It would have collapsed already. But thankfully, my revenues are growing now. So people's portion sizes have already been drastically reduced. I was just talking about this with my best friend at dinner 2 hours ago, and we were reminiscing about 10 years ago, how when we went to an Outback Steakhouse for like a regular New York strip steak, that was on the menu, or a regular ribeye, not the bone-in ribeye at Outback Steakhouse, it was like $16 or $17 with a side item, with a side salad and a side item. And now it's like $26, and the Fed's inflation data doesn't cover any of this. And when I went to Target in college, or Walmart in college, it was maybe $65 or $70 to fill my cart up with all the stuff I need, consumer staple items. And to fill that same cart up, it's like $140, $150. And the inflation data, the CPI, consumer price inflation, doesn't reflect any of this. So the amount of portion size, the cost per unit, the quality of the food, the portion size, it's all being substituted or reduced. The Fed's not tracking any of this accurately. And I don't know how many people at the Fed would actually admit that this is not accurate. It's tough to say. Like the real everyday American, their healthcare costs are going up every year. A lot of people, their rent is going up every year, every couple years. So you have food, rent, healthcare, and that's the majority of people's expenses. Those things are all up. And the inflation data, the official government inflation data, is not reflecting any of this. I started looking Avareal, Blackwing. I started looking at Mavericks Metals. They're starting to make some more sense. No, I'm not as bullish on Mavericks as Sandstorm Gold, but they are making some interesting investments here. So if the gold price goes up, Mavericks will have more cash flow. But it looks like a lot of the assets they bought are not as near term as Sandstorm Gold. But they're doing some interesting deals. I still prefer Sandstorm Gold, obviously. But Mavericks is starting to grow on me, in my opinion. Okay, we got a couple more super chats here. RR says, thank you. Thank you. It's scary that there are true believers that are clueless in high positions. RR, some people actually know exactly what's going on. President Trump was actually honest in a lot of his tweets about inflation, the dollar, war, prior to him running for president and becoming president. So now that he's in power, like, he's done a 180 on so many things. Like Trump wants negative interest rates now. He wants more QE. He wants more interest rate cuts to negative interest rates, and he wants a much weaker dollar, as if the dollar hasn't already been devalued fast enough. But for the reasons I outlined in my dollar tug-of-war thesis, it's going to be very, very hard for the Federal Reserve to devalue the dollar faster. Very hard. Now, ultimately, I think a couple years from now, they will be able to do it, but it's not going to be easy. So a lot of people in the gold community and alternative media are going to say how easy it is to devalue the dollar. It's not as simple. Because there's two very powerful forces in a tug-of-war with the dollar. Agent Jeff Thomas says, once gas prices go up, they can't hide it anymore. Jeff, and that's why the shale oil production was subsidized. In my opinion, that's why they subsidized a lot of it. Also, dumb pension fund money invested in it and didn't get good returns. They kept gasoline prices low, which allowed the consumer economy to continue to spend. If the gas prices would have been $4 or $5 a gallon in places other than California, the average American would have had a lot less discretionary spending. So shale helped the U.S. economy a lot more than a lot of other countries. So there's a number of reasons why the U.S. subsidized shale. Less dependence on Middle East oil, but also it benefited the real economy. You want me to put my phone somewhere else? Yeah, sorry, it's this college girl I just met on a dating app. Thank you for the super chat, though. Yes, Daniel, some of the stories from Bloomberg are good, but the analysis from people like Joe Wiesenthal, like some of these predictions that these guys make, it's up there with Paul Krugman, some of the ridiculous predictions. Okay, so that beep was my phone. It's unplugged from the charger. I just threw it somewhere. Well, the problem with tax cuts on the rich is the rich don't invest a lot of that money back into maintenance CapEx and growth CapEx and research and development and property, plant, and equipment and starting new businesses. A lot of that tax cut money went into share buybacks and higher dividends. So the corporate executives can continue the scam that they have going. Greg, we're not going to have normalized interest rates. Not in Japan, not in the European Union, not in China, not in the US. Maybe in emerging markets we will. Because their central banks aren't powerful enough, even though there is a lot of intervention there too. there's a lot of evidence that emerging markets are in the most trouble. There was another interview that came out in Bloomberg in the last day or two from from a bond fund manager that buys emerging market bonds, and he says there's going to be a lot of defaults in the next 12 months from emerging market sovereign bonds and emerging market private sector bonds. Oh, we got another super chat here from Dimitri. Thank you, Dimitri. Let me see here if I have your question. I've gotten a lot of super... Okay. Negative interest rate policy will be the thing to destroy confidence in the dollar. Do you think they will push oil up, and how far high oil prices will push the market up? So it looks like oil prices have rallied quite a bit, and at these levels, the shale oil companies, some of them are doing a little bit better, but the question is, can the shale oil companies either roll over their debt or refinance their debt without going bankrupt or raise capital? And from what I'm hearing, a lot of the shale oil companies here in the US cannot raise anywhere near the levels of capital, largely because the pension funds are not going to give them dumb money anymore. That's one of the major reasons. So a higher oil price, if oil prices can stay around $65, $70 a barrel, it will probably mean there will be a little bit less bankruptcies, and some of these shale producers will be able to either roll over or refinance their debts, so they won't default. But I think negative interest rate policy is going to be delayed a little bit. So there's a fight inside the Fed about negative interest rate policy. It seems the younger PhD economists, the Bernie bros, are in favor of negative interest rate policies, the most radical ones. So the younger PhD economists and researchers inside the Fed are in favor of negative interest rate policies. They're the ones like at the San Francisco Fed who put the research report out in February about how if there was minus 5% interest rates in 2008 and 9, that the US economy would have recovered even faster. But the older people at the Fed, like Jerome Powell and the people on the board of governors, so the more experienced people at the Fed, they are against negative interest rates for now. But the U.S. doesn't have to do negative interest rates yet. They just have to cap yields for now. So on a relative basis, the U.S. still has positive yields compared to pretty much everywhere else. So that's still going to bring capital into the U.S. That's going to bring money into the dollar. They can be socialists and still get paid six figures and have cushy retirement plans and Cadillac healthcare benefits and pension plans. So they're making, some of these PhD economists are making, at the Federal Reserve, they're making six figures and can't be fired. So they're getting all the benefits of a high salary job with basically no chance of being fired, and they can write this crap. They can write the research reports. So there's a lot of fights in the Fed about negative interest rate policy because the people at the top of the Fed, like Jerome Powell and the Board of Governors, are seeing all the damage that negative interest rate policy has done to the European Union. I like a strong dollar and low inflation, Shell. The people in power do not. So a weak dollar benefits the U.S. government. Weak dollar means that their debt is going to be devalued, all the federal government debt and the unfunded liabilities, as long as they don't pay the right amount of cost of living adjustments. So a weak dollar benefits the over-indebted zombie corporations that have overborrowed and big government that has massive government budget deficits. It benefits them the most. The people on Main Street, people like you, me, listening to this podcast, a weak dollar does not benefit us. It means it's going to cost us more to maintain our standard of living. And of course, the government economic data, the economic propaganda is not going to cover any of this reality. Okay, super chat from Penguin. Do I think the year-end rally in the gold price was related to the Iran incident, repo madness, or more generalized phenomenon? I think there was a number of factors. I think there was a bunch of different factors. The gold price initially rose from $1,200 to $1,500 approximately, and that was because the miners could not raise any capital, and the miners, a lot of primary gold miners were some of them, from what I'm hearing, especially primary silver miners, were 6 months away from bankruptcy. So there were a lot of primary silver miners when silver was barely above 14 7 or 8 months ago. and gold was around 1200. There was a lot of gold miners in trouble, and there was even more silver miners in trouble. So if there was not a rally then, the miners were in big trouble. Now the miners can a lot of the miners still can't raise capital, but you're seeing mergers and acquisitions, and the miners with the better balance sheets and better margins and cash flow now are buying the assets for cheap. So that's preventing the amount of bankruptcies. So the shareholders are not getting wiped. The industry has to. People don't understand this, but the more gold that's mined means less total grade. The grades are going to go down. Over time, if you look at the total average grades for gold every 10 years, and if you look over longer periods, the average gold grades drop, which means that the cost to mine the gold is going to have to increase because the grades are falling. So like a bonanza grade mine like a Fosterville right now, which has over 10 grams per ton gold on a lot of the deposit, but has 20, 30, 40 grams per ton gold on other parts, those are very, very rare. Whereas in the 1970s, there was a lot more of them. So I think there's a number of reasons for gold. There's obviously tightness in the physical market for tonnage for gold. Because you're seeing what the Poland, that they flew all their physical gold out of London. So you're seeing stories like that, and that just means that the banksters have less ability to play the paper game. Thank you for the super chat, Richard. I don't agree with anything anyone says either. So that's good that you're skeptical. I've learned the hard way not to agree with everyone. Not to agree with everything anyone says. Excuse me. I don't know which currency that is, but I appreciate it. Stalemate says there are now only 2 1/2 payers into the Social Security system. For every Social Security beneficiary in the U.S., it's expected to be only 2 to 1. In the 2040s, in late 1950s, it was around 8 to 1. Yeah, and it was predictable that this was going to happen. I mean, Social Security is a Ponzi scheme. Inverted yield curve was good for gold. Inverted yield curve was good for gold. Victor Jesperson is right. 17 trillion negative yielding bonds, also good for gold. Negative yielding debt's good for gold. Central banks increasing their balance sheets is good for gold. Okay, why did this guy just copy and pasted Andrew Yang to join Andrew Yang's campaign in the live chat here? Okay, Andrew Yang does not represent freedom. The freedom dividend, are you kidding me, dude? You're forcing people to take money. You're redistributing wealth. There's nothing freedom or dividend about that. That is straight up propaganda. I'm sorry, but if you're gonna copy and paste like an Andrew Yang campaign text or email and put it in my live chat, you're going to get called out. And if I remember correctly, Yang is a 1%er, is he not? Okay, well, I think that's pretty much it for tonight. I am working on some other projects. They may take a little bit more time than I expected to finish them. I have an interesting short little video I might do on all the different types of bailouts China is now doing. The different types and amounts of bailouts China has been doing now since May of last year, May 2019, is crazy. So just in the last week or two, there's been another couple different types of bailouts. So China is doing all different types of bailouts to extend and pretend and keep their credit Ponzi scheme going. It's very interesting. Meanwhile, we got people in the comment section on my other video saying there's 0 chance China will collapse first, 100% chance the US will collapse first. Wonder if they're on the Chinese government payroll. I don't know. I think Trump actually doesn't like a lot of people at the Fed. He wants the dollar devalued faster. Trump doesn't understand. I don't think anyone's explained it to him, the dollar tug of war. So if you know President Trump, send him my dollar tug of war video. I don't think he'll like it, but he may respect it. I'm getting good feedback on the dollar tug of war video, although a lot of people are still like, well, it's a good video, but the dollar's still going to rally a lot more, or the dollar's still going to devalue a lot more. I'm getting a lot of that. Well, it's a good video, and the tug of war has happened for 2 years now, and the tug of war probably won't last much longer. The dollar tug of war won't last much longer because the dollar's either going to rally a lot more or it's going to devalue a lot more. But I'm telling you, though, there's two very, very powerful forces. It's like a very evenly matched tug of war with two very strong teams, and both sides are pulling as hard as they can against the dollar, and for now the flag in the middle in a tug of war match is not moving really at all, and that's why the dollar is staying in a tight trading range. So this may go on a lot longer than people think. It's lasted 2 years already where the dollar index has stayed in a tight trading range. Now the trade weighted dollar index is different because that's the dollar against emerging markets currencies. And I think emerging markets are probably in the most trouble. There's a lot of things going against emerging markets right now. So I want to thank my over 200, I think it's 230, give or take, Patreon account contributors, my dozen or so monthly PayPal contributors, and people throw me tip once in a while. I also take Bitcoin and cryptocurrency, but I am not a crypto pumper like Bill Holter and Jim Willie have claimed I am. And you can tip me in crypto if you want. I take 6 different cryptocurrencies. So Bitcoin, Litecoin, a few of the others. Ethereum, I take a few of the others if you want to throw me a little bit of crypto. But I appreciate everyone who chips in so I can focus on content, research, information, and analysis, and trying to provide the best analysis and financial education possible with my channel. And my opinion may change on things. So it has changed on the dollar tug of war video. Think the tug of war can last at least 6 more months, I think, but we'll see. I know people on both camps. I'm friends with people on both camps in the dollar, very strong dollar rally, and also much weaker dollar that think there's 0 chance of that happening, but they also didn't see the dollar tug of war lasting 2 years already in a tight trading range. And also, thank you very much to my, let's see how many people. 1, 2, 3, 4, 5, 6, 7, 8 different super chats. Oh, Daniel. Thank you, Daniel, for the super chat. Thanks for calling out dumb trolls. It's fun making fun of the trolls. I'm so good at this now. I mean, I'm good at... So if you're going to come in here and you're going to think, oh, I'm going to hate on him. Oh, I'm going to talk. I mean, I've heard pretty much everything already. I'm good at giving it right back. So be careful what you say in the live chat section if I see it. Or below videos. So a lot of super chats tonight. Thank you very much, guys. And I will continue working hard to provide you some of the best content out there. And hopefully I will continue to get better at this as we go along.